With interest rates taking the highest jump we've seen in decades and some signs of a possible cooling economy in the future, the question on everyone's mind regarding the housing market is, are we headed for a cool down or are we headed for a crash? As a matter of fact, one of the highest Googled items over the last 6 weeks is housing bubble. Let's take a look at what the experts have to say and also get my take on it. But first, let's take a quick look at what's going on in the market. So let's take a quick look at mortgage rates. As you can see, and we've been talking about, they started their climb about the beginning of the year and really started to accelerate about the beginning of March. We are starting to see a little bit of relief over the last couple of weeks where rates topped out at about 5.75% middle of May, and we're seeing a little bit of a reduction. Last week they were at 5.1%. Jumping into the housing market, we're going to take a look at new listings. New listings year to date are down 8.2% over last year. In the last 4 weeks, they're down about 7.2% over the same time period we were at last year. If you take a look at that line, though, we've seen a pretty steady growth of listings as we've moved on through the spring. Pending sales, on the other hand, started the year fairly strong, but have started to level off. You can take a look at the graph here. You can see we're down about 0.9% year to date, so pretty close to where we're at last year. But when you take a look at the last 4 week numbers, we're down about 10.8%. And you can see that on this graph here as the green line is hovering below the white line, which is last year's sales. Take a look at the median sales price here. This one threw me a little bit of a curveball. You can see, and if you remember about 3 weeks ago, I was talking about how prices have leveled off. Over the last 2-3 weeks, they've taken another climb. We're at $630,000 for the median sales price here in the metro area. I'm still expecting this to start to level off here as we move forward, but we did see this little unexpected jump here over the last several weeks. Taking a look at inventory, April numbers here, we're a little bit dated on the data that we have. So April, we're at 0.8 months. You can see that's definitely down, but up a little bit from the March. But I am going to predict that we're going to see May numbers when they come out, probably around 1 month of inventory, maybe a little bit more. And here's why. Take a look at this graph here, and it's showing listings versus pending sales. The listings are the green line, the pending sales are the white line. You can see since about the second week of April, we've been putting more homes on the market than we've been selling, which is good news. We're seeing that inventory starting to build here in the Portland area. So the question is, cool down or crash? Let's take a look at what Daryl Fairweather, the chief economist at Redfin, predicts. He's saying that he thinks housing sales are going to be down about 10% in 2020 compared to last year as demand weakens a little bit. He doesn't expect prices to decline, but he thinks price hikes are going to slow. Dropping from the crazy rates we saw last year, about 20%, to something more like 5% annually around the end of the year. Interesting point here that he brings up. He believes home builders are going to be spooked and that new construction is going to slow down a little bit. What's that going to do in the short term? Maybe not a whole lot, because remember, these starts are actually building homes in the future. But he is saying that he expects that if home builders start to constrict now, we may see another tightening of the availability of inventory in the next couple of years. So what's my take? In addition to David, I've been listening to experts all over the industry, and they're all really pointing to the same thing. And this is what my take is going to happen in the market. I think prices are going to level off as we head into summer, despite this little blip we've seen here. And I think we're going to see more of a 3.5 to 5% appreciation as we're in towards the end of the year. We actually may see some little pocket markets that are seeing a little bit of a price decline. Possibly areas like North Portland. That seems to be one of the softer areas in the Portland market right now. Same thing with condos downtown. I think the Fed's going to continue to raise the federal funds rate, and that's going to have kind of a mixed impact on what we see in mortgages. And it all really depends on how the economy is reacting to these increases. If the economy is believing that these increases are going to tame inflation, cool inflation, it may have a very minimal impact on mortgage rates. If the economy is feeling that these actions still aren't doing what they need to do to get inflation under control, we're probably going to see continued rises in rate. And I think we need to remember too, people are always going to need to buy and sell. And I think as time goes on and we get past these first couple months here with these rising rates, I think the market's going to adjust to what's going to be a new normal of interest rates in the 5%. Have questions about the housing market or your home? Give us a call, send us an email, or reach out to us on social media. We'd love to hear from you.